Well, the issue of cell phone call rates has been a hot potato in South Africa for some time now. Recently, and first, Vodacom and MTN reduced their prepaid all cost per minute from R1.75, that's to R1.20 in the case of MTN across all networks. And with Vodacom's free for sure, you pay only for the first 3 minutes at R1.20 per minute, and then the remaining 57 minutes of the hour are free across all networks. And then probably the headache for the two biggest cell phone network providers, Cell C, of course, came and set their call rates across all networks at 99 cents per minute. Its CEO Knott-Craig even went as far as saying that they were prepared to turn to the courts to force the regulator to cut high mobile termination rates. So here to discuss what's taking place currently in the telecom sector here in South Africa, we've still got Garth, Theunissen and Jessica Hubbard, and joining us for the conversation, Vermeulen, tech journalist at MyBroadband, and Stephen Ambrose, CEO for Strategy Worx Consulting. Thanks for joining us. Okay, so let's talk about, I'll start off with you, Jess, because you've been looking at this space right now. I mean, as you see it right now, what is taking place? Are we currently in a price war? Because everyone's saying we've always been heading towards one, haven't quite got there yet. Do you think that we can define this as a price war in South Africa now?
I think it's been going on for some time, so there's nothing that has changed much over the past couple of months. There's been a tussle over the termination rates, which is the price that operators pay to carry calls on each other's networks. And Knott-Craig came in and fought for lower termination rates because the newcomers, Cell C being a newcomer, or it was, I suppose, a couple of years ago, argued that higher termination rates favour the bigger industry players. And he essentially got what he asked for, so the termination rates were cut. So Knott-Craig has really been sort of shaking things up, and he has brought down prices, so it has benefited the consumer ultimately. But the market is saturated, so the networks are having to come up with a whole host of new tariff structures and new benefits to attract and ultimately poach new customers from each other. So I think that's really where the wars are. It's not really in lowering prices, it's actually offering customers additional benefits. We've seen Vodacom now moving into the insurance space, and the whole intent is to poach customers, and that's where it's getting interesting, is their innovations in stealing customers away from each other.
I mean, Knott-Craig said price is not a strategy of theirs, but certainly if you look at what they have been doing, it seems like it has really formed a core part of how they're trying to win new customers to get that scale. I mean, what's your assessment of what he's been doing, of course, Knott-Craig at Cell C?
Well, essentially, Knott-Craig was one of the incumbents. He headed up Vodacom for years. And as Vodacom, him and MTN dominated and still dominate the landscape in South Africa to a large extent. I mean, they've got pretty much the 85% market share. So he helped set up this duopoly of mobile, and under his watch, the termination rates went from 27 cents to R1 something, R1.27, I think, in the space of 2 years. And that's hugely detrimental to smaller players like Cell C. Traditionally, in any market, when they introduce a third and a fourth operator, their role is disruption. It costs a lot of money. It's an mobile is an infrastructure game. It costs multiple billions of dollars US to set up comprehensive networks like theirs that cover 98% of South Africa's land mass and population. So initially, it makes sense to protect the two big guys. Thereafter, open it up, bring in people like Cell C, and let them disrupt. What happened, because they were so effective at introducing termination rates and keeping the competition out, is that Cell C struggled. They matched them rate for rate, but they weren't able to undercut them significantly because most of their cost was a termination rate. And being a small one, ultimately a good portion, in fact, most of your calls will terminate on someone else's network. So you're responsible for paying those rates. Whereas both MTN and Vodacom had the ability of terminating on their own network and not paying anybody for that call. So termination rates was a huge issue, which took, funny enough, and it wasn't Knott-Craig who brought them in. It was ICASA who actually got them to come down on a sliding scale over a period of years. And they're down in the 40-cent range now. And they're no longer the main determinant of the costs of mobile. And only when they dropped to that level was Knott-Craig able to come in now as the disruptor, third small operator, and create competition of this sort and drop calls to 99 cents, which did disrupt the market. However, what's interesting is that Vodacom and MTN didn't react for a long time. They didn't have to. they were so dominant, they were so in control of the market, that for quite a few months, they didn't actually react at all. And MTN even reacted only in the last few months. So the disruptive effect of Cell C hasn't been huge, but it's definitely created a new momentum.
Are they making money though? I mean, of course they're not listed, so it's hard to tell how profitable Cell C is with this strategy right now. What's your assessment of how it's going to pan out for them? Are they going to be able to, build that mass capacity to be able to continue to build on their success, incremental success now?
So when we ask Knott-Craig about these things, I mean, as you say, they don't have to disclose how much money they make, but when you challenge him on the fact that he said, hang on a second, you said that pricing, just lowering the pricing wasn't going to be a strategy for you. He said, absolutely, it's not going to be, that's not what your strategy is going to be, but a strategy with lower pricing is far better than a strategy with a high one. And then he also said that he actually built in a buffer. He said that 99 cent per minute on per second billing call rate that they came out with, he had actually anticipated his competitors hitting back at him. And so he'd actually worked in a way for him to drop the price even further should they decide to take him on head on. And it's not been necessary because nobody is trying to compete with him.
What about postpaid customers? Because certainly they're saying that postpaid customers are now paying more than prepaid customers. So you'd assume that the next move is to drop postpaid.
He has actually dropped the postpaid rate to 99 cents as well.
Yeah, so there we go.
Calls. Yeah. So yeah, they were second. So it's always the poor contract guys always get it last, but they did get it eventually.
Because you're locked in, so you're not going to just toss your SIM card and move on to another company.
So after the price cut, when Cell C went down to 99 cents per minute, did we see a whole wave of customers moving over, or what did you observe?
Yes, there was quite a large... Look, I think you've got to understand that South Africa is pretty much a prepaid market. So when you've got prepaid and churn, which is people swapping networks, in the 30 to 40% range, that means in every year, 30 to 40% of your prepaid members are going to move from your network to another network. And it's as easy as pulling out a SIM card and popping in another one. So the minute he dropped his calls to that price, people thought, well, let's give it a try. And they churned immediately across to his network. And I think it's created issues for them in terms of capacity. They didn't anticipate they'd get so many people. The danger with prepaid and the danger with this type of strategy, and that's why he's quite right, it's not a strategy, is that as quickly as they moved to Cell C, they could move back to MTN if MTN dropped to 85 cents.
So the prepaid market is ultimately very fickle and
incredibly
quite a tough
fickle.
one to win.
And that is why a lot of people have more than one SIM card. Of late, the amount of specials has dropped enormously because they realized they were shooting themselves in the foot. When they were giving away 10 minutes free and 10 free SMSs at 99 cents for a SIM card, everyone rushed in and bought 10 SIM cards. They were the cheapest calls in the whole universe. And that type of arbitrage has gone down because the networks are not doing quite the same thing.
So based on that, could we argue that Knott-Craig's strategy has been a bit short-sighted?
No, I think he had to do something to stand out from the crowd. He had to. He had played the game, or Cell C itself for so many years had played the same game as the others. And he needed to actually finally draw a line in the sand and say, look guys, this is what we're doing. We're much cheaper. And the other fundamental thing he did, he simplified his packages enormously. It's almost impossible to compare MTN and Vodacom packages.
And I've done that. I've tried to do that before.
It's impossible to try to figure out because you've got so much here and you've got so much there. They're incredibly complicated. And he simplified things enormously, and he's come up with really simple, compelling and clear and easy packages, both post and prepaid. So as a disruptor, Cell C is now playing much more of a role, and for that we actually have to thank someone who was originally the maker of the status quo, Knott-Craig.
What about data? I mean, how much money is the likes of Cell C making from data right now, especially prepaid data, if that's the market we're operating in South Africa? Yeah,
so data is a whole different ball game, and we don't have Cell C statistics to go by really, but we've got overarching statistics, and so we've got research organizations in South Africa that look into this year on year. So Worldwide Worx is one of them, and they actually look at at what the proportion is between voice revenue and data revenue. And data revenue is actually still comparatively small. But in terms of the amount of attention you get when you drop data prices, that's actually fantastic. So even though it impacts your revenue very little, you can
gain
make
more.
you can make a big splash. And so Cell C, for example, have cut their out-of-bundle data rates on most of their price plans to 15 cents a meg, where everybody else, the next cheapest is 8 at 1 rand a meg on certain packages, and then everybody else is charging 2 rand or something equally ridiculous.
Can I ask a question for both of you? And I'm an outsider looking in. I'm not a tech journalist. I don't know a huge amount about this industry. But I do, obviously I have a cell phone and I have a 3G data card. My 3G data card is with Cell C. And I mentioned this to Jan before we came through. I was very, very happy with their service up until the beginning of this year, where suddenly, out of the blue, bang, their 3G data network just started hanging. I couldn't access anything. It was a nightmare. I then went to the Cell C shop down the road and I asked them what's going on. And the answer I got was, oh no, they're upgrading their network. And ever since they've upgraded their network, the actual quality of their data has plummeted, and from a user experience. And my experience with the other two networks is even worse. So could you first of all fill us in, in terms of the infrastructure out there? Is it sufficient to meet the demand? What is going wrong? Why do we have such poor 3G connectivity?
If I may comment on that, I do believe that in many respects, as much as the networks profess to be investing billions of rands into the networks currently, because of the strong duopoly that existed, they're under-invested for so many years in capacity. And I mean, there are challenges. Getting as you saw in Craigavon, to get a cell phone mast put up, you have to jump through a million hoops. So there are issues, but they have underinvested. So I do believe that the networks in South Africa are somewhat running at very, very tight margins in terms of capacity. And that's exactly what happened to Cell C. Yes, they are upgrading. Yes, they are improving their network, but it takes time. And at the same time, they've still got to deliver a service. So they're struggling. The other key problem, which Jan is probably champing at the bit, is that the government itself is dragging its heels on spectrum allocation.
Yeah.
Okay.
So they had to, Cell C, MTN, all of them are releasing LTE, which is the next evolution in data. And it's far more stable and much better in terms of an experience should you get it one day. But they still don't have the relevant spectrum by a cost.
And enough, yeah.
And they don't have enough spectrum. So they're
very
refarming.
quickly,
Sorry,
just 30
Jan.
seconds before we wrap this up. On the spectrum issue.
All right, so basically the situation is that the operators are, they need the spectrum in order to offer a service on this new technology called long-term evolution. And the problem that we are facing in South Africa is for them to play in this game, and Cell C as well. MTN and Vodacom have made big waves launching commercial LTE services and stuff by doing what they call refarming the spectrum. That means that they're taking away from their existing wireless infrastructure to roll out this LTE thing, which only a handful of people can use anyway. Cell C, to do the same thing, they are eating into their allocation of 2100 megahertz, which is what 3G, they run on 2100 and 900 megahertz, their 3G network. So that could be a reason, just another reason for their capacity problems.
Yeah.
Stealing from Peter to pay Paul.
Exactly, that's exactly what's happening. And we're running into general, and I think the key thing here is the competitive advantage of all these networks right now is data.
Yeah.
Voice, voice is still growing, interestingly. From all the networks that report, voice is still growing.
We've got to wrap, unfortunately. Thank you so much
data's
for
the
joining us.